Okay, good morning, everyone. Looking at the US stock markets, the Dow has earlier on retraced from the recent peak of around the 26,000 psychological level. It has fallen or tripped below the 24,000 psychological level, which was the previous strong support. Subsequently, it has hit towards the 21,750 points before staging a strong recovery. And on last Friday, we are seeing the Dow has formed a gap up formation as it recovered all its previous session losses and also rebounding back above the 23,000 psychological level. The recovery on the Dow Jones, whereby it has surged 3.3% or positive close to 750 points, was mainly spurred by the US Federal Reserve Chairman Jerome Powell, dovish comments on the interest rate outlook in the US. For now, we are expecting the index to continue to creep higher towards the 24,000. Once the 24,000 level were to be breached, we might see further upside for the Dow Jones to head back towards the 25,000 psychological level. All in all, this could be the short-term bottoming out formation on the Dow Jones index, as you can see that the Dow appears to be forming the higher low formation and also the potentially the higher high formation over the near-term period. Likewise, the S&P 500 has also retraced from the recent peak of around the 2,800 psychological level. It has fallen below the 2,600 and subsequently hit towards the 350 before staging a strong recovery. And on last Friday, we are seeing the S&P 500 has recovered to reclaim the 2,500 psychological level as well. For now, let's monitor to see how the S&P 500 holds to trend towards the 2600. If we can see a breakout above the 2600, we could expect further upside for the S&P 500 to climb back above the 2700 psychological level. In the meantime, the 2450 will serve as the immediate support level for now. And like the Dow Jones Index, we are seeing a potentially higher high and also the higher low formation being formed on the S&P 500 over the near-term period. Okay, some of this on the crude prices. The crude prices has earlier been trading between the 50 towards the 54 US dollars barrel level. Subsequently, we did see the sharp pullback on the crude prices back towards the 42.50 before staging a recovery over the past couple of days. The crude prices has gained about 5 to 6 consecutive trading days, mainly spurred by the lower than expected US inventory data and also the OPEC's production cut measures. For now, we are expecting the crude prices to head towards the 50. Once the 50 level will be breached, further upside will be seen towards the 55. If you look at the longer term picture, you can see that this could be potentially the trend line formation, a breakout above the 47.50. We need to monitor for the 750 level to be breached. Then only we can confirm for this trend line breakout to trend towards the 50 or even towards the 55 level. In the meantime, the 45 will serve as the immediate support level for now. Okay, so on this on the local front, back home, the FMKLCI has earlier recovered from the 1630 level towards the 1700. It has formed a shooting star candle on the 1700 psychological level. Subsequently, it staged a healthy pullback towards just the around the 1670 or 1660, and before trading on a sideways manner over the past couple of days. On the FMKLCI right now, we could expect some of the recovery pattern to kick in at least for today or at least for this coming week for the key index to trend towards the 1700 psychological level. And if this were to materialize, this could be forming the FMKLCI could be forming the higher low and also potentially the higher high formation over the long short to mid-term trading period. So for now, we could expect some of the positive momentum spill over from the US stock markets on last Friday on towards the Asian stock markets, including the FMKLCI. the low liners wise, we are seeing some of the similar pattern was being formed on the 19th of December earlier on this day itself. We have mentioned that the small cap index could be on the bottoming out formation, and there could be some of the bargain hunting activities over the next couple of weeks, and we expect. And since then, the FM small cap index has continued to recover. And on last Friday, we are seeing the FM small cap index has recovered, forming the bullish engulfing candle to close above the EMA 9 level. For now, we could expect the FM small cap index to continues to creep higher back towards the 12,200 points level. Indicators wise, everything appears to be slightly positive right now. As you can see that the MACD indicator has really shown a buy signal over the past last trading week, whereas the RSI has recovered above the oversold position and it appears to be heading towards the 50 level. On stocks wise, some of the stocks that we can watch out for, firstly would be GFM. GFM has earlier traded towards the recent low of around the 36.5 cents level. It has staged a recovery towards the 53 cents. Subsequently, price has retraced again back towards the near the 41.5 cents level, finding some support along the 41.5 cents. The 41.5 cents is a very strong support level. As you can see that it has earlier recovered above the 41.5 cents level on several occasions before trading higher. And recently, we are seeing a good recovery pattern on our GFM as price rose and also closed above the EMA 20 level, accompanied by some of the mild improvement in volumes. For now, let's monitor for the breakout above the 45 cents level. Should price breach above the 45 cents, we could expect price to head towards the 48.5 cents or even towards the 53 cents level. Stop loss is located below the 41.5 cents level on GFM. On indicators wise, things appears to be slightly positive as well. As you can see that the MACD histogram has been turning green over the past 2 days. MACD line has been trending higher, whereas the RSI continues to flirt mostly above the 50 level over the past 2 weeks trading period. On CCM, a chemical company of Malaysia has again recovered from the recent low of 155 towards the 2 ringgit and 15 cents. Subsequently, price pullback and gave up most of its previous sessions rally. And could be a healthy pullback. As you can see that during the rally phase, we are seeing some of the higher volumes being accumulated on when the price continues to trend higher. But during this recent pullback phase, we did not see much of the selling pressure. And recently, we are seeing some recovery pattern accompanied by some of the improvement in volumes again. So for now, on CCM, let's monitor for this short-term breakout above the 185. Should price breach above the 185, we could expect price to head towards the 198 or even to back towards the 215. Stop loss is located below the previous short-term breakout of 1 ringgit and 75 cents level on CCM. If you look at the MACD indicator, you can see that the MACD indicator has really issued a buy signal following the breakout above the 175, whereas the MACD line has also risen above the 0 level on last Friday. On open system, price has earlier formed the higher high and also the higher low formation, with the uptrend interpretation formation being formed towards the recent peak of around the 37.5 cents. Price subsequently pulled back towards the recent low of 27.5 cents level before staging a recovery as price gap up and also closed above the EMA 20 level on last Friday, breaking above the 29.5 cents level as well. With the breakout above the 29.5 cents, we are seeing the MACD indicator has really issued a buy signal. RSI has risen above the 50. With the breakout above the 29.5 cents, we could expect further recovery on OpenSys towards the 31.5 or even towards the 33 cents level. Stop loss is located below the 27.5 cents on open system. For Dayang, earlier we did mention on this company that we are going to monitor for that we are seeing a breakout above the 53.5 cents level, but did not see any follow through by interest beyond that, and instead price subsequently staged a pullback and traded on a sideways manner. But on last Friday, we are seeing the strong breakout above the 53.5 cents level as price was also close above the EMA 20 level, accompanied by some of the rising volumes. With the breakout above the 53.5 cents level, we could expect price to trade towards the first target price 59 towards the 63, stop loss below the 50 cents level on Dayang. If price were to hit the 59 cents level and it stage a pullback, then you could also expect expect to accumulate around the 53.5 cents level before the next wave of rally back towards the 63 cents level on Dayang. Last two company for today will be firstly is KGB. Kensington Group Berhad has again hit the recent peak of around the 1 cents level, forming a double top formation. Subsequently, price pulled back sharply towards the 88.5 cents level before staging a strong rebound. And on last Friday, we are seeing a price from the flat formation breakout, accompanied by some of the improvement in volumes above the 1 ringgit 8 cents. With the flat formation breakout on last Friday, price might head towards the 116 or even back towards the double top formation of the 1 ringgit 26 cents level on KGB. Your stop loss is located below the previous low or the last Friday's low of 1 ringgit psychological level on KGB. Last company for today will be Mountain. Mountain is still on a downtrend formation right now. Any recovery will be just taken as a technical rebound. But if you look at the longer term period, we are seeing a potential bullish divergence signal on the price and also the MACD indicator. The price has been forming the lower low formation, but the MACD indicator since June last year has been forming the higher low formation. With price hitting the recent low of around the 40 cents level, we are seeing a strong recovery pattern on our Mountain, accompanied by some of the improvement in volumes being traded recently. Price has formed the gap formation, hitting the EMA 60 level before staging a 3-day pullback. So this could be the potential T+4 formation breakout that we're going to monitor for the breakout above the 47.5 cents. Should price reach above the 47.5 cents, price might head towards the 51.5 or even towards the 56.5 cents level. Stop loss below the 43 on Mountain. If you have any questions, you can put in the chat box. I'll reply you shortly. There's one question here on our reach. Rich Energy has again hit the recent peak of around the 51.5 cents level of 52 cents. Subsequently, price has pulled back towards the 21 cents level before staging a recovery pattern on Rich. So for now, we are seeing some of the positivity on Rich Energy. As you can see that the indicator has reached a buy signal recently, whereas the RSI continues to flirt above the 50 level. For Rich Energy right now, in order to see if further recovery on the price, we need to monitor for this breakout above the 30.5 cents. Given that price has really found a bullish engulfing candle on last Friday, let's monitor for the breakout above the 30.5 cents, or you can trade this company towards the 30.5 cents. That will be the intraday target. If the price were to close above the 30.5 cents level, then we might see further upside for Rich towards the 35 cents or even towards the 39.5 cents. Stop loss below the 26.5 cents level on Rich Energy. All in all, price appears to be on a bottoming out formation. As you can see that after the recent recovery, price continues to maintain its position just right above the EMA 60 level over the past couple of days. If there's no further question, that will end the morning briefing for today. Thank you.